Hello and welcome to today's morning report on Wednesday, the 24th of August, with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of mixed open again on the European session. I think markets are basically biding their time in front of this Yellen speech on Friday at Jackson Hole. That has got the potential to be a defining speech really for monetary policy for the Fed in the coming months, and I think markets or traders are certainly unwilling to take a view ahead of that, and sort of looking at these sort of forex majors. You've seen that the dollar is basically just settling down, no real direction on that. It's interesting that the 2-year Treasury yield has picked up slightly, but the sort of earlier gains that we saw today on the dollar have not really sort of followed through, and we're seeing just again basically settling in line with where we've been for the last couple of days, really, on that dollar. Similar sort of moves on commodities, really, and with the gold price basically flat. Silver had an interesting breakdown, but whether that will lead the gold price lower, I don't think it will. But oil, interestingly, is lower today. Having bounced back yesterday, it sort of started to drop again, and it's interesting that this corrective move has started to take hold a little bit, but whether that actually starts to really take hold in front of Janet Yellen and Jackson Hole. You've got a fair amount of volatility potentially today. You've got the IEA oil inventories. Actually, let me just show you. Sorry, wrong one. So bad at this. Here we go. Oil inventories starting off with, well, that's at 330. It's the expectation of another drawdown of 0.9 million barrels, and gasoline stocks another drawdown of 1.25 million barrels. And you can see this on the chart. Basically, the last few weeks, it's sort of been dropping away again. You had a couple of inventory builds, 3 weeks of inventory builds, but last week back lower again. It's expected to be lower again this week. So that's at 330. Ahead of that, really, you've got the existing home sales at 3 o'clock, and the expectation is for 5.51 million, which is slightly down from the 5.57, but again, basically in line with what we saw last month. No major changes there, but that pretty much is all the data that we've got to look forward to. Nothing really out in the European morning whatsoever. So those bits of data, but to be honest, the market is sort of pretty much biding its time, I think, in front of this Janet Yellen speech. Now, with that in mind, my chart today is the Aussie dollar, and we've seen, sorry, that's the hourly chart. Let me go to the daily chart. We've seen the Aussie dollar coming back to this uptrend that had been supportive throughout June and July. You could argue a very small top pattern actually completed on a move below support at 76.33. You could argue that's a double top. It shows better on the hourly chart, but sort of gives you a downside target of 75.10 of around about 120 ticks, 125 ticks. So there is still scope for that, around about 100 ticks to the downside potentially if this corrective move continues. Now you look at the stochastics and they are falling, and the MACD lines are falling as well, but the RSI basically just drifting. There is a little bit of room, you could argue, 47 and 45 were the low points on the RSI when we got back to the uptrend last time out. So just dropping back, there is still scope for further little bit of corrective move potentially on the RSI, but certainly it looks as though this uptrend is being tested. Here's that double top pattern that shows, and the corrective move, if I zoom out even further, you can see since that uptrend began, actually that's an uptrend since late July, so that's wrong. Sorry, that one is wrong. Since the market has just completed that top, it's rolled over and the moving averages are now falling away. You see a very slightly more corrective outlook on the RSI and the hourly, with the RSI sort of finding resistance around 60, 65, coming back towards 30. Very minor sort of bearish bias within that, but falling moving averages is a negative. Also, you can see that sort of an old pivot around 76.50, which is an old level going back a couple of months. 76.50 again coming in as the basis of resistance yesterday, so that is a basis of resistance to watch out for overhead. But it looks as though this market is a little bit more corrective now. These major highs are coming in at lower levels, and 76.50 being the latest one. So this little rebound that we're having in the last sort of couple of hours, it'll be interesting to see if it starts to come up against resistance again. Don't forget, 60 to 65 is tending to be where the RSI is now sort of failing. Yeah, that may be a little bit further room to start looking for your sell signals, but I'll be interested to see if that resistance at 76.50 does hold and the market just drops away again. But for now, this uptrend is holding, but it is potentially going to be coming under pressure with these corrective moves, and there's a little bit further downside potential in that RSI in the correction. But yes, it's an interesting move, and in front of Jackson Hole, whether you'll get any significant downside move anyway is unlikely, considering the last sort of couple of days have had sort of very small bodies on these candles, no real direction. So I wish you good luck in your trading today, and I will speak to you later. Thank you.